All right, this is Bruce for FX Coins taking a look at the dollar index DXY. So this is uh, Wednesday early and Thursday. I'm sorry, early Thursday session. And we're taking first a quick look at the weekly on the DXY, and you can see that the DXY broke out of this trend line here back in November and then proceeded to break out above this prior swing high here, which is part of this large rectangle price structure, this consolidation range. There was a false breakout here in November and then a follow through here in December, leading to an eventual high of 110.18 and then a turn down. And that turn down subsequently developed a head and shoulders top here that triggered this week and a drop below last week's low of 106.13. And you can see the sell-off has been decisive with the drop almost reaching the 61.8% Fibonacci retracement of this prior rally. So this potentially puts the dollar index in a position to test the lower price zone eventually of this consolidation pattern, or at least the 200-week moving average down here converge with the 78.6% retracement. So we have a pretty sharp drop down going to the daily chart now, pretty sharp drop down from this head and shoulders and right through the 200 moving average potential support and this trend line potential support and kept dropping. So that means from my perspective, we could potentially have a nice sharp rally at some point once a bullish reversal does set up, if that is to happen. But first, that could swing us all the way back to the neckline and the 20 moving average. So that's marked by this zone here from 106.76 down to this prior swing low here of 106.13. Once we break down from a pattern, there's the potential to swing back and test those previous support levels as resistance and then continue the downward trend. That is the potential for what is going on right now. But first, the most likely scenario now is we find support when we get some type of rally that either finds resistance in this zone here or it eventually makes its way up to this zone up here. Barring that, however, if the 103.98 area fails to hold support, then the dollar index may be heading down here to this interim swing low here at 103.37 on the way to the 78.6% retracement eventually. Now, this is a bigger pattern, so this could take some time to play out, but this is what is going on in the bigger picture, and it's going to impact the shorter term price action. Okay, that is it for DXY. Take care.